second leader.
Indian market gains defying Trump's reciprocal tariff threat, marking second day of gains. Nifty trades above the 22,500, indeed closes above that level. The Sensex trades above the 74,300 levels. Mid-cap, small caps lead the charge, with metals index gaining over 2%.
The Reserve Bank of India announces a bunch of liquidity-boosting measures, a move dealers expect will incentivize Indian companies to take more forex loans, which can reduce the capital account deficit caused by FPI outflows. This comes at a time when weakness is seen in the dollar.
The US government seeks zero tariffs on almost all products traded between India and the US, with agriculture products being the only exception. This comes at a time when Elon Musk's Tesla is entering the Indian market. Further sources told CNBC TV18 the US is unlikely to make an exception for India from reciprocal tariffs. Essentially, no carve-out is what we're learning. That's a CNBC TV18 exclusive. Hello and welcome to a fresh new edition of Markets Forward. It did well today, and there has been a rally and repair on the way up. 22,500 is back at the table. We'll wrap up all of the market action for you and, of course, tell you what's important as we come back for the last day tomorrow. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi. Markets extending their gains for the second day in a row and closing at a two-week high, and 22,500 on the table now.
Yeah, I mean, I think I was just thinking, in some ways, this has been the most sort of well-defined, orchestrated, choreographed kind of a recovery, right? I mean, everybody nicely turned bullish together.
Bullish at the same time, calling a bottom at the same time, yeah.
And all of this in the last 3 days, right?
Yeah.
And the market so far is kind of obliged. So that's a good thing. Just a quick run-through of some of the factors, right? I mean, some are old and some are new and some are just basically stock-taking. We've essentially, the new thing at the margin is we've seen a big rally in government bond yields around the world. Typically when we have these shock moves in yields, equities sell off. But that's not happened so far. So you essentially have a situation where yields are up, not small. In Europe, for example, they were up between 20 and 30 basis points. In Asia, look at Australia, look at New Zealand, look at Japan. We're talking about 8, 10, 12 basis point jumps. But equities have rallied on. I mean, actually, the Hong Kong index is up. I think it closed up 2.5% plus. Of course, I mean, there's China. But otherwise, equities have not been hurt. We'll have to watch this in terms of how this goes on. It started in Europe with that big announcement out of Germany, and it's kind of spread through to everywhere else as well. Positive macros for India, lower dollar. Of course, I mean, what happened in Europe essentially means higher euro. Euro has got the largest weight in the broader dollar index, and the dollar has been selling off. So 3% in the last 3 sessions. Oil, Brent is sub $70, and these are very important signals. As a consequence, metals first linked to the dollar. Big move today for the second day running in 3 days, from the lows 3 days back 10%. Oil and gas on the back of the fallen oil prices. The index was the second biggest gainer, 7.5% from the lows 2 days back. And of course, small cap index is starting to perform as well. We got about 8% so far on the board for the Nifty small cap index, and from the lows 3 days back. But actually, even the micro cap index, which saw severe damage, at least if you look at what it did today and yesterday, there is some amount of recovery which is coming through. So, will we stay the track? We're already at about 22,500. How much more? The good thing, of course, is that leverage, etc., in the system is completely being cleaned out with that sharp one-way fall that we've had. And we'll have to see what sort of F&O positioning, etc., is. As of yesterday's close, there was still large short positions. So, a bit of a clean run in that sense, very light positioning. Good macros, all of that leading up to this big surge. Flows, of course, from the institutional side also important. FIIs and the cash side have still been sellers, and something to track when that starts to become a bit of a trickle, and when will it start to stop and then turn around. Rima.
Well, we'll discuss this with our guests. Let's also tell you what we have for you on our show today. Key developments in Dalal Street, top corporate voices, the events to track ahead. So let's, talk about the big movers and shakers of the day. As always, we've got Hormis joining in for that. And some of the stocks that we have on our radar include Reliance. After that, we've got bullish views coming in on Reliance Industries from several brokerages. Oil marketing companies saw gains after the dip in oil prices. So Hormis, now it's over to you for the big movers and shakers.
A lot of the positive takeaways just summarized by Prashant. One of them, of course, being that cool off in oil prices. Now at a 6-month low is Brent. At one point was almost down to a 3-year low intraday, and that has rubbed off on every oil sensitive that you can pick your mind in. Chennai Petro was among the leading gainers in today's session on the Nifty 500, 12% higher there. Castrol, another crude derivative, of course, a news flow related to the company as well, but ending 10% higher. It's been a while since we saw a 5% move on the upside in Asian Paints, and of course MRPL and the OMCs led by HPCL also having a good day today. Industrials had a good day as well in today's trading session, be it the likes of Jyoti CNC, 11% higher, ending at the highest point of the day. Triveni Turbine, Hitachi, second day of gains after positive commentary from Goldman Sachs, among other names as well. Metals, as you mentioned, linked to the dollar, cool off in the dollar, positive for metals. Jindal Stainless is the stock that I wanted to mention, not the Hisar one, of course. Godavari Power, Hindalco, Welspun, Hindustan Zinc, of course, with the rally in metal prices as well, rubbing off on the stock. The newsmakers of the day, of course, Reliance Industries, the top contributor to the Nifty gains today, 3% higher, ending at the day's high as well. So another positive there. Gensol continues to remain in the lower circuit despite the management clarification on a whole host of issues. Credit Access Grameen after its business update, and BSE after another price target cut from Goldman Sachs today, ending at the lowest point of the day. And volume-led movers, of course, Sapphire Foods, and a lot of these names ending with gains of 3 to 4% on very strong volumes in today's session. Back to you guys.
Thank you very much for that. Let's invite Ambrish Baliga and Richard Jain of Motilal Oswal Financial Services on the show now. Richard, let me start with you. Do you think markets can extend themselves further from here on? Do you think there's more fuel in the tank?
Good afternoon to everyone. I think, yes, we should see some more pullback move before we go into some consolidation phase, because ideally, if we look at the recent lows of around 22,000 to 21,800, there was a strong support where even last year in 2024, from the month of February to May, we had multiple supports in this range. Also, the momentum readings were oversold, and the fall in the dollar index, I think, provided that key reason to show some kind of pullback move from this support and oversold zone. So I think initially, whenever we see such pullback moves, 20 DMA is the first level where we expect first resistance to come in, which is right now placed somewhere around 22,700 to 750 range. So I think some more steam is left. 22,700, 750 would be the initial resistance, which should be tested maybe next 1 or 2 trading sessions itself.
Okay, so 22,700 or so, right? At least. I mean,
right.
Yeah, 20. I think the 20-day, the daily average is around 22,800 or something. I mean, so maybe we will see if we are able to get to it, and then we'll see. Ambrish, what is your sense?
Prashant, in fact, we were talking of this band of 22,000 to 22,500 levels should be good levels to buy in because the valuations have become decent at these levels. And in fact, we were about 40% in cash about 6 months back. And we have been investing all through when the markets are coming down. And I have suggested that most of it should be invested within this band. And possibly we should just hold on to 10% in cash in case of any eventuality that the market comes below 22,000. I mean, that's worked out decently well as of now. And again, people are asking whether we have seen the bottom. I think it's a bit too early to say whether the bottom has been formed or not, because only once we see the markets moving up, possibly 6-8% or more, and then can we say that that was the bottom. I think it's a bit too early as of now. The way I see is because of this bounce back, we can go to levels of about 22,800, 23,000 levels. But then post that, we have to see whether it holds on, consolidates at those levels and moves up. Because clearly, I don't see a V-shaped recovery because I mean, still there are a lot of uncertainties. Again, the tariff wars, I think, is one of the major ones. So for the time being, I think we would be more or less in this band. So those who have bought at lower levels, I would say that at least book some profits in case we see 23,000 plus. And again, get into cash to a certain extent, because the next couple of months is going to be difficult overall. We'll not see a major recovery from here. I think it'll be like range bound.
Asian Paints, I think Asian Paints shares have hit a 3-year high today because they've been under so much pressure on account of competition. But today, the decline in crude prices over the last couple of days has provided that big tailwinds. Ambrish, is there a tactical buy at least? I mean, would you recommend a tactical buy in Asian Paints even as the competition overhang looms large on Asian Paints?
Absolutely, because see, whatever said and done, I mean, Birla Opus, whatever revenues they are targeting in the next 3 years is 1/3 of Asian Paints' current revenues. And we should understand that as of now, Birla Opus is investing. They are not spending. They are investing in building their market share. I mean, even the ad spends are actually investments for them. Whereas for people like Asian Paints or a Goodlas or a Berger, whatever they spend today is a revenue expenditure. So because of which, I don't know whether you've noticed, Asian Paints has taken a step back, and we don't see too much of spend happening on marketing and sales as of now. I think they're just biding for their time. Maybe they're waiting for Birla Opus to spend as much as possible, possibly increase the overall market, just not their market share, increase the overall market. And then possibly you'll see Asian Paints coming back with a bang, maybe in the next 2 quarters or 3 quarters. But with the sort of a fall which you've seen in Asian Paints, I think the valuations are extremely decent. So if someone has, patience to hold on for the next possibly 18, 24 months, I think it's a great level to buy Asian Paints at this point of time.
Okay, all right. Point taken. Reliance Industries and oil marketing companies have seen a move today. Sudarshan is here with what's happening in Reliance, which is in a way a sector in itself with a number of businesses under it. But of course, we're talking about oil and gas here specifically, and of course OMCs as well. So take it away.
So first, talk about Reliance Industries. There are 2 positive brokerage notes. One is from Kotak Institutional Equities, which sees an upside of nearly 16% from current levels. It has upgraded the stock to buy with a target of 1400 per share. And Jefferies too maintains buy call with a target of 1600 per share and upside of nearly 30% from current levels. So recent underperformance reasons given by both Kotak and Jefferies are the same. First, weak or subdued retail business performance and weak refining business outlook. And because of that, Kotak Institutional Equities has cut EBITDA estimates by 1 to 3% for FY 26-27. But despite this cut, it expects an earnings CAGR of 11% over FY 24-27. So what are the key catalysts? As per Kotak, key catalyst would be first, retail business will likely improve in next few quarters. And if any statement related to Jio Platforms listing and likely another tariff hike. So these would be the main key catalyst. Also, as per Jefferies, store sales growth and area addition should restore 15% growth for retail business in FY 26. And also it believes that tariff hike, likely listing of Jio and improvement in O2C business will be the key triggers. Now coming to oil marketing companies. In the last 3 days or say this week, all the 3 names IOC, BPCL and HPCL are up in the range of 10 to 15%. But still, if you take a look from 52-week highs, these stocks are down somewhere in the range of 25 to 30%. Now, why these stocks have been moving higher? So the first reason comes to mind is the recent dip that we have seen in the crude price. Brent has now moved to lowest levels in last 6 months, and this because OPEC Plus has decided to increase the output. Basically, it has reversed its earlier decision. And second reason, if I can say so, is basically this LPG compensation. If you remember, in the budget, government did not announce any LPG compensation, but after that, Oil Minister Hardeep Singh Puri had come on our channel and said that LPG compensation for oil marketing companies will come. One negative risk that, if I can say, the moderation in Russian crude discount, but more than negative, they are positives for oil marketing companies. Lastly, about the valuations, HPCL is trading at 1.1 times FY27 price to book value versus historical average of 1x, BPCL at 1.1 times versus average of 1.4, IOC at 0.8x versus average of 0.9. So even on the valuation front, there is a room which shows that there might be a further uptick we can see in oil marketing companies.
Thank you very much for that. Let's just get in our guess on this. Ruchit, first on Reliance Industries, what is the trade that you would recommend? And then comment, in oil marketing companies, which one would be your preferred trading bet?
I think Reliance Industries is trading at a very interesting point. It's around its weekly 200 EMA, and I was just looking at the historical chart. Last time it tested its weekly 200 EMA was in the COVID correction. So I think after that, whenever we have seen corrective phase, we have not seen the stock going around those levels. So I think it provides a good opportunity for long-term investors, to start buying the stock over here. So I think price-wise downside at least seems to be very limited, but it's not that high beta name where from a trading perspective you can expect big gains. So it's good for long-term investors to start buying over here. OMCs could be trading bet, where the pullback moves have been supported by high volumes and even falling crude pad. Of course, that's a positive trigger which would keep the momentum intact in the near term. And within the OMCs, I think HPCL is on the charts. HPCL is looks the best where relative outperformance could be there within these three names. On the higher side, 360 to 370, where the 200 DMA is placed on HPCL could be seen in the near term. So Reliance, my bet would be for more from long-term investors, while from a short-term trading perspective, HPCL can be bought.
Ruchit, metals is the other space, 10% from the lows 3 days back. What is looking particularly strong in any trades here?
So again, Prashant, clearly, benefiting from the falling dollar index, there's an inverse correlation. Whenever dollar index falls such sharply, the metals tend to do well. And also, if you look at the relative performance since the month of Jan in last 2 months, where most of the indices have formed a lower low compared to January lows, metal is one of the index, metals, financial services, private banks. These are only 3 indices where the January lows have not been breached. So in the recent corrective phase, already a relative outperformance was seen in the Nifty metal space. And now the falling dollar index, I think, has led to a breakout in the metal space. So I think this should really do well in the short term. JSW Steel within the back is looking the best because the high top, high bottom structure is there within the space. If you look at the relative performance, then JSW Steel was already outperforming in the falling market. So I think we should see levels around 1070, 1080 in the near term. Although we are positive on some other metal names as well, such as Hindalco is also looking good, but I think JSW still should stand out in this metal rally.
Okay, thank you. Let's get to the other story. Important one for the day. The US government seeks zero tariffs on almost all products traded between India and US, with agricultural products being the only exception. This comes at a time when Elon Musk's Tesla is all set to enter India. Pariksha joins in with the details.
Well, yes, this is the week when India and US have formally started talks on a bilateral trade agreement. Earlier in February, Prime Minister Modi and Donald Trump agreed to sign a bilateral trade agreement by fall this year, by September or October. So now the talks have formally begun in Washington, D.C., and US has made the demand that India should actually be ready for zero tariffs, and that is something that US wants across product lines except for agriculture. Somewhere there is an understanding that when it comes to agriculture, there are sensitivities on both sides. Can India do that? Remains to be seen. But in the run-up to this visit, experts have been telling us that India can give zero duty concessions to the United States on 90% of industrial goods imported from US into India. And in turn, we want more market access for products made by our labor-intensive sectors. When it comes to Tesla, clearly the US wants zero tariffs on Tesla as well. He is not keen, Donald Trump is not keen for Tesla to make in India or manufacture in India or set up another manufacturing. Whatever manufacturing should happen only in the US, according to Donald Trump. So let's see how India responds. These are the first set of meetings that have taken place. Both sides will now go back to their officials and deliberate on these talks even further. But India would definitely like to avert those reciprocal tariffs which come into effect on the 2nd of April.
Okay, all right. Pariksha, thank you very much for that. So it's the high interest and high impact decision, and what's finally negotiated, how much room for negotiation, etc. As Pariksha is saying, no special carve-outs, but hopefully there will be some room to negotiate from India's side in that sense. Well, now to a CNBC TV18 exclusive. Gensol Engineering is denied any wrongdoing in response to allegations by rating agencies. Remember, rating agencies downgraded their rating on Gensol to D, which is default. Also, very serious charges that documents were falsified. We had Anmol Singh Jaggi of Gensol speaking to us about the situation, what they're doing, the debt outstanding, and of course, what they plan to do from here. Listen in.
The obligation that we have on a monthly basis is about close to 20 crore rupees a month. And approximate, I'm saying, so there is about 20 crores a month that we have, which means that we will need about 60 crore rupees in the next 90 days to keep all our obligations on track. And I think the current money that we have and the money that we will get from our customers, plus the promoter equity infusion that we will do, we will be able to ensure that we make this, we are able to pay this 60 crores on time. With the payment of approximately 60 crores, this number, with the payment of this number, with the payment of all loan obligations on time, the rating agency after 90 days will review our case again, and hopefully with the positive thing that there is no due obligation, we should be able to get a rating upgrade. At least not, I'm not saying that we will go to some BBB or something like that, but it will at least not be in the D category.
Okay, that's the word from Gensol Engineering. We'll also thank Ambarish and Ruchit for joining us on the show. We'll get into a break on the other side. We'll talk, we'll get you the corporate voices and the key market events to watch tomorrow. Welcome back. Let's get to the corporate corner then, the corporate commentary through the day. First up, Adani Wilmar. The company, remember, is all set to acquire makers of Topps Ketchup at an enterprise value of 600 crore rupees. Now, the company says they expect to generate 1,000 crore rupees in terms of revenues over the next 3 to 4 years from this acquired business. Further, the company also expects a significant improvement in margin with an increase of 300 to 400 basis points from the current 8% level. The company is presently awaiting approval from the Competition Commission of India for this deal.
REC management says the company's disbursements increased by 19% on an annual basis in the third quarter. The company has sanctioned various projects in the renewables and other sectors. The company expects disbursements to rise by between 18 and 20% Y-on-Y this financial year. NIMs to be between 3.6 to 3.7%.
And as we wrap the show, we'll bring you the key market events to watch tomorrow. Abhishek is here.
Well, Rima, to begin with, in USA, watch out for Fed balance sheet data that will come out. Last time around, it was around $6.8 trillion. So non-farm payrolls is expected to come out. So estimated at 160,000 versus 143,000 that it was last time around. Also, watch out for Donald Trump. He will host crypto summit over there at White House. With respect to India, RBI will give out the forex reserve data. Last time it was around $640.5 billion. A stock that will go ex-dividend tomorrow is SBI Life. A dividend of rupees 2.7 will be adjusted to the price. With respect to board meet, REC will hold a board meet tomorrow to consider the market borrowing program of the company for FY25. So last time when they had begun the year or for FY25, the target was a borrowing of rupees 1.6 lakh crore. Back to you.
All right, Abhishek, thank you very much for that. Thank you very much for taking out those sort of events, and we'll come back to you tomorrow as well. Well, as a wrap on this edition of Markets Forward, keep it with us here on CNBC TV18. More coming up in terms of news and updates in just a bit. Stay with us.